So I'm seeing most investors react and behaved just as predicted, just as most people always do. I noted that we would have some down days during this rally out of the intermediate cycle low. It's, unrealistic to expect that the market would just go straight up and never produce a single down day. And as is always the case during the very early stages of a new intermediate cycle, any down day is viewed as the market is topping and rolling over and going back down to retest the lows or to make lower lows. Um, that's just the way the human mind works. We just haven't put enough distance uh, between the bottom and where price is. So instead of using uh, any dip as a buying opportunity, this is these initial uh, pullback days are always viewed as um, the market rolling over again. Never changes. Every intermediate cycle um, advance, the beginning stage, it's always the same. One thing that I learned to do years ago was when I start to get too focused on the intraday wiggles, um, I found the the best strategy is to switch over to the weekly charts. And if I don't see anything wrong with the weekly charts, then I ignore the wiggles on the daily charts. So now I've converted that same chart of the S&P to a weekly chart. And on the weekly chart, this just doesn't look that concerning to me. We've got the 10-week moving average, which is roughly the 50-day moving average. And I've noted before that um, when price comes out of a intermediate cycle low, usually during an intermediate cycle low, price will drop below the 10-week moving average. And then usually by the time price recovers that 10-week moving average, that's kind of my last confirmation that the ICL is finished and we're in the advancing phase of a new intermediate cycle. We've had two very mild ICLs in 2017. Both of them did manage to drop at least a little bit below that 10-week moving average. And then once price managed to close back above that on a weekly basis, that was pretty good confirmation that the ICL was complete and the next phase of the rally had begun. So you can see same thing here. And looking at our present day situation, on the weekly chart, all I see is a market that has rallied off of an intermediate cycle low and managed to make it up to the 10-week moving average during the first week of a new intermediate cycle. And now we're into the second week. We've got, what at this point just looks like a completely normal pullback as price tries to gather enough energy to push through this resistance level. The chart doesn't look any different on the Russell. Again, we see price is making a second attempt to get back above that 10-week moving average. And as of right now, it just hasn't done it yet. But we don't have any kind of a big sell-off. We haven't erased half of this weekly candle from last week. There's nothing on this chart. If this was a daily chart, there was nothing here that would make me concerned that that this wasn't a bottom or that this is going to turn and move back down. Exact same picture in the Dow. Again, the first week off this bottom, Dow managed to rally up to that 10-week moving average, but was not able to push above it. And this week we've tried again to get above it, but just haven't um, managed to produce enough energy to break through this resistance level yet. Now I want to look at a couple of more constructive charts. This is a weekly chart of the banking index, and you can see price has closed well above that 10-week moving average. We've got a weekly swing in place, and I can tell you, as long as the banks are healthy, the market is not going to be taking any major downward moves, and there is nothing bearish about the chart of the banking index, at least at this time. The next chart is the semiconductor index. That's been the leading sector of the market ever since we came out of the 7-year cycle low, which I now consider a 4-year cycle low. Back in 2016, this has been the leading sector. The semiconductors are an economically sensitive sector, which bodes well for the economy. If the economy was faltering like many of the perma bears like to believe, then this sector of the market would not be leading this bull market higher. And we have the same picture here in the semiconductor index as we do with the banks. We've got a close above the 10-week moving average. We've got a weekly swing in place. And at this point, I think we're just waiting for the semis to get back above that 1362 level. That was the all-time high back in 2000. We briefly did it here at this January top, and then we pulled back. Not unexpected from that kind of major resistance zone. It's taken about 18 years for the market to reach this major resistance zone, so no surprise that it wasn't able to get through it on the first try. We've had a pullback, but we're set up to recover those all-time highs again here soon. At the high this week, we were only about 9 points away. So if we can get a reversal into the week, we could, in theory, close back above that 1362 level, and that would set the semis up to possibly complete a more sustained breakout above that level. And then finally, the tech sector has been leading this move out of the intermediate cycle low. Again, that same picture as the banks and the semis. The 10-week moving average has been recovered. We've completed a weekly swing, and if this was a daily chart, there's nothing that I see here that is overly concerning at this point. This just looks like the tech sector is leading the market out of this intermediate cycle low, and where the tech sector leads, the rest of the market is eventually going to follow. So I'm going to suggest traders, you might want to focus more on the weekly charts right now. It'll possibly prevent you from whipsawing your portfolio back and forth. As I've already watched many people buying high, selling low over and over, and at the moment it looks to me like the bond market is trying to find an intermediate cycle low, and as that process finishes, concludes, it's just causing volatility in other markets, especially the stock market. But we should be within a few days of a final low in the bond market, and once that low is complete, then I think things will calm down considerably in the stock market. But as of right now, there's nothing that looks seriously damaged to me in any of these weekly charts.